Welcome, everyone. Thank you all for joining us today. We're very excited to be here at this webinar. I'm going to start by telling you a drop about the Imperial Advisory. And I'll tell you about our team that we have here today, and then we will get started. So Imperial Advisory is a financial advisory firm. We provide financial advice to companies, and we don't sell products. It's basically a consulting firm. And so for smaller business, we provide part-time CFO work, and for larger businesses, we come in as consultants to the CFO. Our team consists, generally speaking, of, with myself being the exception, but all our other CFOs have also spent some time as CEO. So we're coming, we come in with a broad range of experience. We are CFOs, but we really have a broader view on life. Anyway, we've been having this webinar series, and we're very pleased to have Buddy presenting today. First, I will just say, acknowledge the presence of Bob Doyle, who's my partner here at Imperial Advisory, and Aris, whose last name I'm not going to say, but he'll introduce himself later. And then we've got Buddy. And Buddy and Aris are our two new CFOs. Buddy's focus is spent most of his career working in manufacturing distribution, and we are very pleased to have Buddy here today to talk about 10 things you should look at every day. One thing I forgot that I said I was going to do today, we recently had Buddy and Aris join us, and the way that we found Buddy and Aris was through a post that Ed Flanagan, who is on the call today, put up at an organization called Financial Executive Networking Group. So I'm decided I was going to give him a shout out today because it's our first thing where Buddy's speaking. So Ed Flanagan, who is here, is actually a former CFO, but now he works for a company called Expense Reduction Analysts. They basically go in and help companies reduce a lot of their operating expenses. They add value to your purchasing department. I hope I got that right. But anyway, Ed is on this call, and if you work with companies that need that kind of help, where they need to reduce the expenses of things that they may not be getting the best price on, Ed's a great guy to talk to.
Thanks for
Without further, what was that?
Thanks for the shout out.
You're welcome. I hope I got that about right.
You did. You're good.
All right. So without any further ado, Simon, or as we call him, Buddy, please take it away.
Thanks, Gershon. First of all, Gershon, can I ask you to mute everybody? Because I'm going to turn pages and hit keys to move the presentation along, and that's really annoying for other people. So
I'm going to...
Oh, you know what? You probably can't. Could everybody mute as much as possible? That'd be great.
Everyone can mute themselves. That would be best.
All right. So there's a note in front of me.
Mute all. Well, I'm going to mute everyone, and then you can unmute yourself. I don't know how to mute everyone but you.
Okay, I'll try that. Okay, I'm unmuted. Great. If you hear me turning pages or clicking buttons to go to the next screen, that's me. Formally, I'd like to welcome everybody, and thanks Gershon and our assistant Ariel for producing this webinar series, Take Your Business to the Next Level. If I get too excited, those of you who know me really well, tell me to breathe, slow down, put it in the chat, something, it's okay. So today I'm going to focus on the 10 things you should look at every day. This is an introduction to a much longer piece that I've developed on the creation of a daily report. This is something that can be very specific to your business, and it'll help you every day. And it'll help you prepare to see around the corner and project what's ahead. Our format today will include my almost prepared remarks. Then we're going to have a panel discussion with the other CFO partners at Imperial. I've prepared some questions for them. And then if you have questions or comments that you'd like to make, we're going to save some time at the end for a chat with everybody, and we'll see who the right person is to answer those questions. Before we get started, as a bonus, Imperial will be offering attendees a free 20-minute consultation with two of our portfolio CFOs to get you started on your own dashboard. So we hope you'll take us up on that. So I'm going to start with an anecdote. I see that several current, former, and prospective clients are on the call, and maybe even former members of my team. Hi, Ann. I'll bet you all remember when I asked you, what do you look at every day? It is not a trick question, and I'll explain that later. But today is my answer and a guide for how you might start creating the 10 things you should look at every day. So this Bartlett Pear Sales Company, it doesn't exist. I made it up for this, but it has the hallmarks of a distribution company. And so what these 10 things are that you should look at every day, they have different names. They're key performance indicators, they're metrics, they're a measurement system. There's some fancy acronym in your company for them. I don't know. They're just named by a whole bunch of different things, but you put them on a dashboard, you look at them, you commit them to memory, and you're able to quickly analyze your business and where it's going. Oh no. Okay. Oh, look, how cool is that? No, this is not working. Hold on. Okay. So here's what my daily report for the Bartlett Pear Sales Company looks like every day. It looks a lot more complicated than it is. And the answer to your question is, Greg, we will have a YouTube presentation of this that you could use later. This is what my daily report looks like for the Bartlett Pear Sales Company. It's got data, it's got information, it's got history, it has goals. It looks way more complicated than it is. It is just an Excel spreadsheet for this purpose. Here's what Bartlett does. Bartlett buys pears and sells them to grocery stores and distributors. So at the top, you'll see a section called history, and that's a sum of months previous to the daily report below. It's easy to remember that way. And once you do that, you can look at it every day and you'll know what you've done and how you do it. So we picked a day. It is the 12th working day. As an aside, our team is expert in agencies. So we've got a good match there. Construction, I think we got a good match. Distribution, I hope some of my friends are here, and e-commerce. So here's some examples of key performance indicators, but every entrepreneur that was worth the salt had something that they looked at every day. They had some way of understanding their business. And they put it, and they may not have even put it in a dashboard. They may have said, if I do $500,000 in gross profit per month per employee, I'm going to be profitable. They may say, if my sales are this, I'm going to be profitable. If I have this many subscriptions, I may be profitable. So if you wouldn't mind taking a second, in the chat function, what would you look at? And just so you know, there's 10 of them here. There's hundreds of ways you can look at your business. And they're all good if it's your business and you know what you're looking at. And I urge you to look at the same thing over and over and over again. Okay, Itzig Siegel says he looks at clients. Greg says he looks at billable hours. Barry looks at clients, sales, billable hours. Andrew looks at backlog, clients served, in Ann's case, donations received, sales. Lawrence, is that sales per day? Is that sales incoming? Is it invoiced sales? Sales per day. Oh, new prospects. Yeah, so everybody knows what they are and what they look like. I'm glad I predicted some of them. So let's talk about Bartlett for 1 second. We buy product, we inventory product, we ship it, we invoice it, we pay for the stuff we bought, we collect the money, and we start again. In the case of the Bartlett Pear Sales Company, my 10 things are the same every single day. So if you look at that small package that I call the daily report, you'll find so much data and so much information. But the best thing is, in the case of the way I do it, it takes about 10 minutes a day. And then you can use it. So the first thing I do is figure out how I'm going to measure. So those of you who know me know that I look at every business in terms of months, and months can be broken down into business days. And it's the first thing that I define. So business days can be different for all kinds of companies. For example, a convenience store is open one day every month. So that business is most likely open 365 or minus Christmas or minus Thanksgiving or minus Easter, whatever. Those businesses are open that many days. So each month is measured by how many days it's open. There's a lot of businesses that are more likely Monday through Friday, no holidays. So I count Monday through Friday and I subtract out any Monday holidays or any holidays that are there. In this case, May of 2020 had 21 business days. So here's my daily report. Again, I'm choosing the 12th working day of the month, May 18th. And in this case, we're going to talk about three of the things that I look at. One is, whoops, not good at that, sales. So for Lawrence, this is like what you look at. We look at sales every day. And this company, the Bartlett Pear Sales Company, had a rough day on May 18th. It did $875 in sales that day. Since this is in an Excel spreadsheet and I know how many working days there are in the month, I can also tell you how much the sales have been month to date. So we have done $16,922 month to date. I do this by 7 o'clock in the morning. So everything that was supposed to be yesterday is yesterday. And then because again, I know how many working days there are in the month and how many there have been, whoops. I know that we've averaged $1,410 in sales per day. So this is how I measure sales, and it's going to be the heartbeat of how I compare against our objectives or our goals for the month, our goals for the year, and any other metric that I'm looking at. In my case, in terms of Bartlett Pear sales, this is defined as sales that have been invoiced and shipped. I also look at cash every day, and I think most of you as entrepreneurs do. I look at the amount of cash coming in, which is under cash collections, and how much cash we've collected month to date. It's my opinion that most companies have probably too little cash, but sometimes they have too much cash, and both of those are issues they should look at. All businesses, when you boil them right down, are about money. And money is frequently looked at as working capital. And this is an important metric, and this is something that you need to understand. What is it? Working capital is current assets minus current liabilities. And you can see an example that I stole from Investopedia, which shows that current assets are things that you can turn into cash within 1 year, and current liabilities are things that you owe in less than 1 year. The difference of that is working capital, and it shows up in cash and in your inventory, and the liabilities in your debt, and operating expenses in your debt. But that's the amount of money that you have to use in your business over the next 12 months. I'll bet all of you who are entrepreneurs, but not financial types, have looked at your P&L and said, I've made a profit, but where's my money? If anybody wants to raise their hand or put something in the chat, just tell me, because I believe you, because I have now heard that a bazillion times. It's actually now become kind of amusing. I wait for it. It's going to happen in my consulting life. All right, well, I can't see you guys anymore, so I don't know if anybody raised their hand. I like to use the data that I have to project. And so projections help us see around the corner. And my sister's not on the call, so as far as I know. But I can tell you that there was a day when I was working in our family company when I was by accident liquidating the business. And I got a call from someone who I'm related to by birth who said, you know, you're liquidating the company. And I said, I had no idea. I can't see around the corner. And that person said to me, yes, you can. And it was at that moment that I figured out they were actually right. And I needed to figure it out. So if you remember, we had on May 18th, the 12th working day of the month, we had done $16,922 in sales. If I divide that by the 12 working days that have already happened and multiplied it by the 21 working days that we have in the total month, we're going to have sales of roughly almost $30,000. The problem is I made a budget and the budget says I should do $34,550. What that tells me is if I expect to reach $34,550 a month in sales, we better hustle. So it's mid-month. I'm able to figure out approximately what I'm going to do and whether I need to do something about it. So on the left, you can see this fancy spreadsheet that I've done with all the really neat colors that match the colors that are right and everything like that. Let me show you how I used to do it. I used to do it by hand. And for those of you who can't see very well, I have really terrible handwriting. I cross things out because I make mistakes. Things change in my database sometimes. All of those things are true, but it doesn't stop this from being right. So on May 18th, on this piece of paper, we invoiced sales of $20,011.35. We had incoming orders of $172,000. We had cash coming in of $28,000. We had AR of $1 million. You can see what I was doing. I was doing it by hand. So if you have a basic and timely fundamental bookkeeper and a system at your company, you should be able to get these every day. And after you get these, it takes about 10 minutes to implement them into your spreadsheet. Each tab on my spreadsheet is a month. And my guess is that everyone attending has, if they're not good at Excel themselves, an employee, a family friend, a fractional CFO, a child, someone who's good with Excel. Get their help or just do it on a yellow legal pad like I did in 1985. So this spreadsheet basically has 4 sections. Sales, where I calculate the sales month to date and the average sales. I track my orders, my incoming orders, the number of orders I got each day, and the cumulative amount of orders. For those of you who trace backlog, I also have a backlog, customer open orders. I track my cash. I love to know how much cash is coming in. I love getting checks or ACHs or wires. And I concentrate on how much cash I've received month to date. And then the balance sheet entries that I have actually would show me what my working capital is, because the calculation is generally accounts receivable plus inventory minus accounts payable is your working capital. That's generally most of the accounts necessary. So that also helps me determine my trade cycle, which is the trade cycle is the amount of time it takes to turn inventory into cash. And all of you want to know that. In fact, I would say, who doesn't want to know that? So from a leadership perspective or management perspective, you want to make sure that your company is in alignment. I can't tell you how many companies I've gone to where there's no alignment between sales and manufacturing. Sales are graded on how many sales they get. Manufacturing might be scrap, or they might call it waste, or they may call it something else, but has nothing to do with what's going on in sales. And operating managers might be pre-tax profit, where they're focused on operating expenses and they have no control over gross profit. So if your goals are not aligned within your company, you're going to find yourself in all kinds of trouble. Make sure that everyone understands what the goals are and that they work together, not separately. You can see that I'm a big fan of setting goals. Wow, that was actually the same note that I wrote down, so I must have remembered that. So always set goals. I always set a budget, and I always compare. I assume that since most of you are entrepreneurs or leaders, you're also really competitive. So be competitive with yourself. If you set a budget, compare yourself to it. So you can see that I have a budget line down here at the bottom where I have the average sales per day that I'm expecting. I have the incoming orders that I'm expecting. And you can see that my incoming order expectation is a little bit lower than the budget that I had for the month. Here's what I perceive my accounts receivable will be at month end. And I'm a little light. You know, I'm a little light on sales. The same thing is true with cash. I know exactly how much cash I want to have in the bank at any one time. And I can use, if it's above that number, I can use that to pay down debt if I have it, or I can buy more inventory. So I have a special question for now. I would like to know who said, if you can't measure it, you can't improve it. Who said it? First one in the chat gets a special gift from me personally, not from Gershon or the firm. Andrew, boom. Oh man, Andrew's actually a friend. That's not fair. I probably said it to him. You're right, it's Peter Drucker. And it wasn't something that I wrote. Okay, so, way to go, Ed. Okay, so on my daily report, number of working days, invoice sales, cumulative sales per month, average sales dollars per day, blah, 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 blah. You can read them all. It says that there's 10. I think that there's 10. There's 10 data points. And those data points turn into information for me. So what I'm doing is I'm just looking at stuff every day. And I contend that you should only have as many KPIs as any team member can remember. If you ask them, they need to be able to answer what the measurement is and what the current answer for that is. So the answer to the question, the answer was Peter Drucker, the founder of modern management and one of my favorite management theorists. The only thing I don't know is whether he actually said it or not, or whether it's apocryphal. That said, I'll just accept it and use it. That is the end of my formal presentation. And we are now going to have a panel discussion with the CFO, portfolio CFOs within the company. Can everybody no longer see that? Okay, so just a reminder, Gershon, Bob Doyle, and Eris Michaelides, I got it, Gershon, are going to be on the panel.
All right.
So Gershon, you're going to unmute Bob and
Sure. I mean, they can both unmute themselves.
okay.
Yeah, I'm good. I'm unmuted.
Okay. Hey, Bob.
Hey.
Eris, are you unmuted?
I am.
All right, there you are. And okay, so I had one question that came to us earlier this week already. So we're going to go. We have, and this goes to any member of the panel who wants to answer. We have at least one nonprofit attendee. Does our topic today work for them? If so, do you have specific insight? And just as an FYI, I worked for 15 years with one of the attendees as the treasurer of her nonprofit.
I would say absolutely. Every business, whether it's profit or nonprofit, has metrics that they can measure against. And I think the key things that Buddy said was alignment and the goal setting. So no matter if you're a small company, a private company, a large company, to get those metrics in place and measure against them is the first step toward managing the business and getting information to make smart decisions.
I'll pick up on what Eris was saying that, I mean, even if you are a nonprofit, most probably you don't have a blank checkbook. And so your goal may not be profit, but making payroll is definitely an important thing. Being able to pay your vendors, keeping the lights on, all that good stuff. So those are a lot of the issues that a regular business has will also apply to a nonprofit. And even if you are in a situation where you've got the credit card of the chairman or whatever of the nonprofit, and you have no cash flow issues and it doesn't make a difference, whoever's paying is going to care about something. And so, well, the nonprofit, the goal may be, if you're a nonprofit giving out COVID shots and someone's paying your payroll and paying the rent and whatever, then they want to know that you gave out enough COVID shots. And so maybe that's the thing that you're benchmarking. There definitely are plenty of things to look at and to track, even in nonprofits. And ultimately, those things are the things which make the difference in your business. So again, if money's not an issue, who's paying your bills and what do they care about?
All right, so thank you. So Bob, this question is for you. Bob, you're an expert on growing a small family-owned company to a publicly traded company. You rose through the ranks. What did you look at daily, and how did it change as your role and the company changed?
Yeah, the most important thing we looked at daily was deposits and cash balances. And what I can't emphasize enough is that as the organization changed, we kept adding metrics and we kept adding things to monitor. And I just throw this out to the group. When I look at the report that you put up there, the way that would have come to pass for me would have been, I would have added to it on a regular basis. So you start out by watching your cash balances and you say, okay, my cash balances are not where I thought they were going to be. What could be causing that? Let me look at the number of collectors that I have on staff. Some of the metrics that we looked at over time were, we'd look at staffing. How many open positions did we have? Because an open position could result in poor performance on a service department or a collection department or an installation department. There was always lead time to hire new employees. So if I was running at 5% underemployment, versus 10%, it would mean different decisions going forward. I would also suggest looking at non-financial performances, and we did that later in my career. We actually put in an employee reward and recognition program, and we started to monitor how many people were being recognized, how many people were having articles written about them, because that was really important to the culture. So, I would say open up your minds and say, what are my non-financial performance indicators as well? Again, building it slowly. And the other thing I just mentioned too is what I liked to do was to convert the daily report into a graphical thing. So you could look at it very quickly. And in addition to the tables, when you had charts and graphs attached to it, it could very quickly let you spot the trends and see what was going on. So yeah, I mean, anything that's important to your business, I would put in. I'm trying to think what else we've looked. If you're a highly levered company, looking at your bank balances, how long till your next payment? When are your covenants going to be measured? When do we, I'm sure we've all been there where you have to manage cash balances to meet a covenant, right? So you have to look at those things a certain number of days in advance. So all that got built into the daily report.
Cool. Eris, which one of your questions do you want? So
Let me just, if I could just add something to
Yeah.
Bob's comments, which I think is important. And I've had some experience with much larger companies. So in a larger company, one of the things we did is push down the KPIs to each individual department. So HR, they had their own KPIs. The warehouse, they had their own KPIs. Sales, obviously. So depending on the size and scale of the entity, you could have KPIs going into the real detail and then bubbled up to where the senior management wants to see a certain set of it. But at the end of the day, everybody in each department is responsible for their own KPIs, and we reported on that monthly. So everybody could see how everybody else was doing. It was a good information sharing.
So let's talk about, you have tens of years experience in hospitality, travel, and retail.
Tens of years, yes.
I didn't say decades. I was trying to be careful. So I know you want to talk about capacity percentage in a hotel or something like that, but what else?
So in that sort of business, you can start from the very beginning, which is call volume. So we have certain metrics on call volume. What are the call volume trends? When do the people call? What are they calling about? Do they convert? If you had a marketing promotion, is that working? That's why you have different codes on what people are calling from, what numbers they're calling, so you can track the effectiveness. And then obviously sales in the hospitality business, it's a lot about rate and volume. You have to look at when they call for, what dates they want, the length of the stay, and of course, the category of rooms. So it's the same thing to a sales mix. What is selling? So from there, you can make decisions on are your prices right for certain categories. So let's say on a cruise ship, whoever been on a cruise, they know you can go on an inside cabin or an outside cabin or a suite. So if only one category is selling, then you might have to adjust, course correct for some of the other categories that are not selling. And a scorecard like this over time, maybe a week or two, you can pick up trends and make adjustments accordingly to try and maximize demand and maximize sales.
So Gershon, what do you look at in your business?
So the things I look at are not necessarily the things that most other people should be looking at, but I guess there's going to be some overlap. The things that I look at are, I look at capacity. Do we have the capacity to provide what we do, to provide enough hours or time to serve our clients? I mean, we've got, to a large degree, we have an annuity business. And so in a certain way, the more we work, the less we make. The more hours we work, if we're charging a client a fixed amount, the more hours we work, the less we make. But then over time, price could potentially adjust for that. But what I look at is, I look at leads coming in. I look at, do we have the capacity to serve? Do we have the capacity to serve what it looks like our pipeline might bring? And then to, I think what Bob was saying before, as time goes on, we say it takes us X amount of time to bring on more people and properly vet them and get them acclimated. How is that going to look? If we, when do we expect to run out of capacity, and when do we need to start addressing that? Something I've looked at with clients is, I guess related, is a lot of labor stuff. You've got, again, it's looking at the overhead that you have, and then looking at, do you have enough volume of whatever business you're in to justify that amount of overhead? So that's something which in a certain way is difficult to look at on a daily basis, but if you compare that month to month, that could be very valuable to seeing if you're over or understaffed for the amount of work that you have.
I agree. So Bob, I'm going back to you real fast. What do you do if you get to a client, or if you're an entrepreneur that's on this call and your financials are a mess?
I think it's interesting. I think you have to look at what preceded that, right? And why would the financials be a mess? And a lot of times it's because the entrepreneur sees accountants and sees bookkeepers as overhead, and they don't really see them as producing. They're not bringing in sales, but at the end of the day, it's my job to show somebody the value in the data, to explain to them why they need that visibility and how it does. I mean, I think you made a great point earlier, which is you can see around the corner. And if you don't have the data, you're flying blind. And that's really what we need to explain to the person that has the messy books. I mean, in a very simple, in a smaller company, the way I would fix that is I would bring in somebody who was a QuickBooks expert and get them to whip it right into shape, which is, typically there's a lot of people out there that are very talented at bringing the financials and wrestling them under control, but getting the entrepreneur, the small business owner, to spend that money, which I believe is a tremendous investment. That's my job, is to explain to them the ROI on that.
I was going to ask one of our guests, Greg Mader, who does that for a living, to say how he convinces that, but my guess is that he's arm wrestled some of them to get that. Eris, if a company is growing too fast or slowing down, do you change your dashboard? Do you add to it? How's the status of the company change your outlook?
So I think if sales are growing too fast, the first thing the board's going to say is your budget's too low. But not necessarily. I think if sales are going well, that's a good thing. And again, you have to look at the composition of sales, the sales mix, and what is working and what is driving that success. If the sales are too slow, then hopefully the information will give you a sneak peek at what is not happening that you expected it to happen. And you mentioned something, buddy, about tracking against the budget. On the hospitality side, the one thing that we can do is we can set up pace reports for each cruise, for example. So the cruise of September 15th, we know we need 1,000 passengers at $100 per day, and we can track the progress on a booking curve. So if sales are not being generated for that specific cruise or an itinerary, you can look at it and make adjustments to that, whether it be price or marketing. So from my perspective, you don't necessarily have to change your dashboard. I do think the dashboard is dynamic, and as your business changes, like Bob said, you might want to add different metrics to that. But if you have your core KPIs and they can help you manage your business, I don't really think you need to change it.
Yeah, I think that I agree. The core KPIs have to be there, but you've always got to keep an eye on to what's changed in your business, right? And those are the things. There are things that go on the dashboard that are just temporary. They're on the dashboard for a month or for 2 months or for 3 months. You're finishing off a project. You've got your team. You've pivoted your team to do something special for 3 or 4 months, and you want to keep an eye on certain things to make sure they don't fall through the cracks. So they would come on a temporary basis and then come off.
Yeah, I
It's
would.
just a matter of being dynamic. Like
yeah, I had a live example of that with one of the retail companies I was with. We had a really big shrink problem. So we had a committee focused on shrink, and that was one of the key KPIs. And once we got shrink under control and we tracked it for a while, then you really need to put it, you did not need to put it on the top of the dashboard. So Bob, you're right.
I was actually going to ask Bob the next question. So, and this is a little bit self-serving because I'm working on a project that's a roll-up, but well, you rolled up a lot of companies. And one of the key criteria of a roll-up is that you have to cut costs and grow at the same time. How do you manage that? Is that one of those temporary dashboard items?
Yeah, it absolutely is. And the way we did it was when you went into an acquisition, you had a list of cost savings that you intended to get. And you would put it out on a timeline. And then you would just simply track against that. We wouldn't do it daily, but we would certainly do it weekly. We had one example where it was a very large acquisition, and we had a $30 million cost savings target. And every week we would meet and we would say, okay, where are we? This much is coming from headcount, and this much is coming from facilities. And you would go through each one of the major items and see where you're tracking against it and where you're ahead or behind schedule. And, sometimes you would change your mind. Sometimes you would say, halfway through the project, you would say, okay, this cost savings is actually going to hurt the business. Let's roll it back, and you would amend your plan. But in my experience, it was weekly tracking of those things until you're done, and then you don't have to track it anymore once you're fully integrated.
Harris, you on with that?
I'm fine.
Yeah, no, I mean, you agree, right? It's a dynamic. It's one of those,
Yeah,
some dashboard items are temporary. Some projects have their own dashboards, right?
yeah, yes, yeah, for sure.
Okay, so Gershon, is there something your clients would be surprised about in their use of KPIs?
I'm gonna go with not all revenue is created equal.
Keep going. That's a good one.
Sometimes you've got revenue where the unit economics works, but where you're using up capacity, which I mentioned before. Sometimes you have revenue where you book the revenue, you provide the service, you quote, earn the revenue if you're thinking on an accrual basis, or you bill the client if that's what you look at, but the client doesn't pay, or they pay in 6 months or a year, and you've got a line of credit out there. Depending on what your margins are, you can lose money even if you get paid in full. If you've got a line of credit, if have your money tied up so you can't pursue other opportunities. So again, depending on the situation and depending on the business, there are often other things to look at, even when looking at revenue.
I used to work with an old school guy who used to say a sale is not a sale until the money's in the bank.
Well, the IRS agrees with them on some days.
Here's sort of a thought. This is a question for me, but it's actually a question for me. How do you institutionalize these 10 things you should know every day to leaders who don't pay attention to them? And my answer for those people who absolutely refuse to do this is you may figure out a way to be successful, but it's highly unlikely.
Thank you.
Come up with a list of things that are important to you and your company. And it doesn't have to be 10, it could be 5, it could be 15. It just needs to be something that you focus on every single day, commit it to memory, which allows you to then analyze incredibly quickly how your business is doing. Those of you who know me, I'm not a whiz at almost anything, but if I memorize a number, I'm going to be able to compare it to that. So, so to any or all, your company, even you can put this in the chat. Oh, Steve Cohen has a question. We're in the Q&A phase. I have a service business with projects that run from 2 weeks to 12 months. We are on a cash flow basis. Some clients provide deposits and some only POs. We have been unable to create a system to generate accurate profits and losses for any point in time other than the end of the year. Any ideas on how we can get our arms around this dilemma?
That's a tough question to answer without a lot more detail, but it's I mean, I don't know if you can look at a percentage of completion, if you can track what your people are doing, how much effort they've invested in the individual projects, things like that. You can, do you track, are you ahead or behind your clients? Do you try and keep deposits coming in to keep up with your costs? Those are the types of questions I would want to ask, but without knowing a lot more detail, that for me, that's an extremely complicated question to answer very quickly. I don't know if anybody else has thoughts on that.
Steve is begging for a 20-minute consultation with 2 of the portfolio CFOs. That's what I'm reading there.
We'll do it.
Yeah.
Hey, buddy, one thing I just want to mention, which is where I thought you were going a second ago. Maybe you were because you got interrupted by the question. But you know how I like to focus on the softer side of business all the time, right? And one of the things that I love about the daily dashboard is I'm not going to suggest it lets you sleep at night, but what it does do is it gives you a certain amount of confidence as to where your business is going. It actually is in its own way a way to remove the stress of the day-to-day running of a business. When you have vision and visibility into where you are, it's just the unknown is so stressful, right? So I always viewed this is a very, for me, this was a very comforting type of a report, because you could act on things very quickly if things were going awry. And if they weren't going awry, you could breathe a little bit.
I think that's a good one. For those of you who know me, I'm sorry, I am not the softer side of business. So we thank Bob for pointing that out and also having me help look in the mirror, because I'm pretty serious about what's going on day to day. To the group, anybody in the chat, how many do you look at every day? Is it 1? Is it 5? Is it 10? Is it 15? Do you break it down like Eris said, by division, and you've got a couple per division? Anybody agree with me that it's only the ones you can remember that make sense? Nobody? None? Guess it was a good seminar then, right?
Hey, buddy, I have a question for you. This is I just think it's an interesting question. So you're as a consultant, you go into a client now, right? And how do you get them to start the effort to do this? How do you convince them that they need to be doing this? And I ask this question because I'm in that situation right now where I've identified KPIs, but the client really needs to dedicate resources to prepare them. How do you kick that off?
This is so great, because I didn't learn this until about 10 years ago. I had a consultant that came to work for me to help me improve the business after the 2008 recession. And we sort of got through it, and we were doing okay, but we weren't doing great. And so I hired a guy, and I'm going to name him, and his name is Mike Silverman, and he's a very famous turnaround guy in Chicago, who was, up until that moment, also had been a personal friend of mine for a long time. I had never seen him work, but I got to see him work up close and personal. And so Mike came to work for me, and our goal was to figure out how to stabilize the business and get it growing. And Mike kept doing one thing over and over and over again. He would ask me the same question again and again and again. And it wasn't as if I were asking the question. So Bob, he would say something like, "Hey buddy, how's Mike doing?" And Char knows Mike. Mike was our VP of sales. And what Mike Silverman was asking me about Mike, the other Mike, was, "I don't think he's doing a very good job, but you seem to think he's doing a good job." So he would ask me the same question over and over and over again. So whenever I get into a situation like that, Andrew, I would say, "Tell me about this. How is this going? What were your sales yesterday? What is your inventory? What is the cost of that? How do you gang your jobs?" Something you think is important. I learned from Mike that if you ask it over and over again, somebody will finally figure out what you're saying to them, which is, this is important to you, or this is important to the consultant, and you don't know it's important to you yet. Mike, at one point in time, Mike Silverman asked me how Mike was doing, and I finally said, "It's time to fire Mike." And he didn't tell me what to do. He got me to figure out what I should do. So maybe that works. And I don't know. Let's hear from other panelists. Eris, do you have an opinion on that? What do you do when a client just won't pay attention to you?
I think you need to try and get them to understand the importance of tracking KPIs. And if there's a tangible result that they see that, hey, if you look at this trend, we can make an adjustment and it'll turn it around for the better. I think results will get people's attention. A lot of the entrepreneurs that I've worked with have that gut feel, which you can never take away. But if it's a data-based, fact-based decision, those are ones that you really can't argue with. It's one thing to say this ad the color of blue of the ocean in the ad will make people feel good. You really can't measure that. But when you're looking at results, you can measure it. And back to your quote from Drucker, that's very important. You need to be able to measure success, because most of us, that's how we figure out whether we're doing a good job or a bad job, is have you hit your goals? And you need to measure that.
Yeah, and you know what? The beauty of the daily report, I think, is that the gut feel typically is there. But what the entrepreneur doesn't, and it always fascinates me how well some of the entrepreneurs and business owners know their numbers intuitively. But what they don't possess is the ability to keep track of that over time, to look at it on a trend basis, to see how's my month going? Is it up? Is it down? Is it, is it better than last month or not? Where are we on that? And that's, I think the daily report is so helpful in framing that perspective as to where we are directionally. Otherwise it's a slow drift in potentially the wrong direction, right? And that's what you want to look out for.
I might interject one thing here. I think something that is characteristic of many of us entrepreneurs is we're always up for a challenge. So I know when I was running my company, it was like, okay, let's give this a go for a month, 2 months, 6 months. I did this recently with my son, who has started his own business recently. Laid out an Excel sheet with some key performance indicators on it. And it's amazing. In just a few months, he's already said, Mom, thanks for doing that. I recognize the value of being able to take a snapshot of my company at any moment in time and see it. So sometimes I think by challenging our employees or our people on our team, just for a shorter period of time, they begin to recognize the value of it, and then they're sold.
Right. Well said.
Lawrence, if you're talking to us, you're on mute.
All right. Buddy, you've got a few responses to your question in the chat.
Yeah. Do you want to
And then after that, I think we got to wind down.
Yep. So one of our attendees said they look at sales on a monthly basis. So one KPI might work for them, right? We're not saying it does or it doesn't. Another one says they use dashboards and monitor a lot of things at once, mostly every day, some monthly. Dashboards are automatically prepared from their data, which is great. Another says it depends, but it looks like this person is drilling down to very, very detailed data. And I'm so glad you're looking at donor dashboard every week. I'll send you money. So that's it. Unless somebody else has a question or comment, I'll let Gershon close it down.
All righty. Thank you, Buddy, for a wonderful presentation.
Thanks for everybody coming.
Thank you, Bob and Aris, for participating as well. And thank you, all of our attendees, for joining us and making this more lively than usual. It's a good format. As Buddy mentioned earlier, we at Imperial Advisory are offering a 20-minute, though if you ask, you mention this offer, you get a half hour, because it's a half hour, 20 to 30 minute complimentary presentation with two of our CFOs. As you see, we've all worked in different industries. We have different takes on life or people or numbers, as we've discussed. So, reach out to Ariel. I'm going to put her email address in the chat. Reach out to Ariel to schedule your half-hour consultation about setting up your dashboard and discussing what those KPIs could and should be. And here, let me type that in right now. And while I'm doing that, I'm going to say thank you all. Ariel.
We'll send out a link. We've recorded this. We'll send out a link. So if you want to forward it to any of your friends, we're also going to make it available to anybody who wanted to attend but had a conflict. So
there's actually one thing I will say about that, which is something got messed up at the beginning, but most of it is recorded. So the bad thing is some of it got messed up. The good thing is now we have reason to do it again. So if people did miss it, maybe that will just be a reason to rehost it. But if you want part of the recording, definitely reach out to us. And have a great day, everyone.
Thanks,
you.
everyone.
Thanks for coming. Bye-bye.
Thank you.
Thank you. Bye-bye.
Bye.
Thanks.